So last week's tutorial on statement of cash flow, how many activities are there? Activities 3. O, I, F, correct. Operating, investing, financing. If I buy and sell PPE under O, I, or F, buy, sell, asset. If I buy, outflow. If I sell, inflow. Under which activity? Investing activity. Okay, investing. If I issue share, receive money or pay, in or out, issue share. Issue share, receive money in, O, I, or F. F, financing. Dividend paid. Dividend paid has to be paid to shareholder. Shareholder is under financing. Okay, not? Now, so question 3. Question 3. You are required to prepare statement of cash flow in accordance to IAS 7 using direct method. Have you learned? Have you learned direct method lecture? Yes. Over here I haven't discussed, correct? So direct method, part B, disclosure note, and part C, reconciliation. So direct method. So what's the difference between direct method and indirect method? Generally means like this. Indirect method is the one we learned earlier, last class lah. Direct method. So the difference is both still have OIF, cash and cash equivalent. The only difference is here, operating activities. Okay, it's different method, but the result still the same. Different method, result still the same. So if we prepare direct method, the operating activities will be slightly different, but you still have to prepare one more called reconciliation. If you use indirect method, no need reconciliation. What is this reconciliation? Reconciliation is exactly as indirect method operating activities. This one. Repeat. If it's indirect method, OIF, cash and cash equivalent, done. But if you are asked to prepare direct method, OIF, but the method will be slightly different. On top of that, you must prepare reconciliation. So what is a reconciliation? It's exactly the same as operating activity indirect method. So if you are a company, would you prepare using indirect or direct? You will go for indirect because you don't want to do so many times. Okay, no? So you prepare indirect. That's why 99% of the company, when they prepare financial statement, their cash flow is always indirect. Okay. So this question 3, they ask us to prepare using direct method, but I'm going to start with indirect method. Okay. So I'm going to start with indirect method. So indirect method will be 3 activities with cash and cash equivalent. So we start with cash flow from operating activities, profit before tax, with all the movement, adjustment, movement, and interest paid, tax paid. So if you refer to question 2, interest paid, tax paid, especially on tax paid, which one we refer to? Tax paid. We look at tax liability, correct? To calculate tax paid, we look at tax liability. To calculate dividend paid, we look at retained earning. Can I? So question 3 now. Let's start with cash flow from operating activities. So the heading is cash flow from operating. Start with profit before tax. How much is my profit before tax? 147. Operating, we got 3 segments. So the first one will be the order adjustment. So what adjustment do we have to make here? What adjustment? Huh? Depreciation. So do we have depreciation here? Yes. Should I plus or minus? Plus. What else do we adjust besides depreciation? Yes. Answer? Forgot. Besides depreciation, what other adjustment do we make in cash flow? Operating activities. Now, remember last week's class, we adjust for depreciation, interest expenses, add back. If it's a gain income, we minus. Interest income, we minus. So these are the adjustment. Movement. If it's decrease in inventory, in or outflow, inventory is asset. Asset down. Inflow. Receivable is also asset down. Inflow. Payable, do we follow? Payable down, cash flow down. Memorize it. After that, we got interest paid and we got tax paid. Okay, so back to this question. We start with profit before tax. Now we want to adjust for depreciation. Yes, we have here 250. Do we have to adjust for loss on disposal? Loss on disposal? Yes. Plus or minus? Plus. Interest income. So minus. Interest expense? Plus. So we have 4 adjustments to make. Let's adjust now. Depreciation, loss on disposal. Depreciation is 250 plus half a mark. Loss on disposal. Five. Interest expenses we add back 15. Interest income 20. We take it up 20. Okay. We don't have to adjust for salary. We don't have to adjust for electricity bill, traveling, wages, advertisement. No, we only adjust for this. You can refer to your lecture note. Those are the adjustment items. Then we have operating profit before working capital changes. Operating profit before working capital changes. What is working capital? Working capital is your current asset, current liability. So operating profit before your current asset, current liability changes. So the next one will be your changes. Is it okay? Your changes will be inventory, receivable, payable. Let's check all the items in your SFP must be taken up. Start with inventory. Last year 65, this year 70. Tick up or down? Increase by 5. Cash flow? Out. Receivable 197 last year. This year 150. Receivable decrease in receivable. Cash flow in, up. Payable last year 18, this year 890. Decrease in payable. Cash flow. Payable is a liability, follow. If it decrease, cash flow also down. Asset will be opposite. So let's try. Let's do it here. Increase in inventory 70 minus 65. Remember to show working. It's an increase 5. In or outflow? Out. Decrease in receivable 47. up, inflow. Decrease in paper is a liability, we follow. If it's down by 90, down by 90. But this question, we have a prepayment. Prepayment is a other receivable. Other receivable 18 increased to 25, increased by 7. In or outflow? Is a current, is an asset. So increase means outflow. How much? 7. So 25 minus 18, there's an increase from 18 to 25, outflow 7. This one very easy, just memorize. Asset opposite, liability follow. So you have cash generated from operation. This one by right we do not know yet. So after that we will look at interest paid. Interest paid. Last week's tutorial, interest paid, interest note 1. Remember note 1? There were no other amount outstanding in respect of interest payable, receivable. No outstanding amount for receivable payable as at either year end. In other words, no opening, no closing balance for interest receivable and payable. No opening, no closing. So what does this mean? If no opening, no closing, whenever we add back our interest expense, add our interest paid will be same amount. No overpayment, no underpayment, same. If we add here, interest paid will be same amount. No opening, no closing, same amount. Okay, now? However, question 3 this week. We have already added how much? Interest expense 15. Now we want to calculate interest paid. Check question. Do we have opening closing for interest? Yes, we do have opening 10, closing 5. So when we have opening closing, we must open T account to adjust. It's different figure. So let's open. Opening interest payable 10, closing 5. Working number 1, interest, opening 10, liability, closing 5. What else should I put in besides opening closing? I must put in the interest expense, the SPL. How much is the expenses? Sorry, not this one. 15. So SPL is 15. So what is my balancing figure? 25 minus 5, 20. So this is my interest paid. Interest expense is 15. However, I paid 20. Okay. Interest expense 15, I add back. I actually paid 20. So put there 20. From working 1, remember to show bracket. Interest paid is different. Add 15, however, we minus 20 here. Because we have opening closing. Next one, tax paid. Most of question tax paid, we refer to tax liability. So we have opening tax liability 5, closing tax liability 20. And the next one will be our tax expense 32. Opening tax liability 20, 5, 20, and 32. Let's open T account. Opening tax account liability 5, closing 20, and the SPL charge is 32. The concept same as interest payable, correct? Opening, closing, SPR. What is my missing figure? 3717. Tax paid. I owe government 5. When I make money, I have to pay government 32. So I owe government 37. However, I owe only 20 because I already paid 17. So tax paid 17. No marks unless you have bracket. Okay? So segment 1, 2, 3 done. We end up with this one 305. Follow the heading, put a net at the front. Net cash flow from operating activities. I know Mr. Su told you to put in what cash generated, cash used in, right? Doesn't matter. Diploma, we use this method. Easy, don't memorize too much. Corrupted already, otherwise. O theta, I will be investing, buy, sell asset, and we got investment, we will receive dividend, we will receive interest. So, do we have interest income? Yes. We have already minus. We must calculate how much we actually receive. Same concept. Do I have opening, closing for interest receivable? Note, there's no interest receivable, opening, closing. Our SFP, we do not have interest receivable, meaning no opening, no closing interest receivable. So, I minus interest income. I add back same amount here. No opening, no closing, same amount. Okay. What happens if you got opening, closing? Open T account, same thing. Clear? Now we have investing, we got buy and sell asset. Look at which one? We look at PPE, tick PPE. Question, is this cost or accumulated or net book value? This is net book value. Let's look at question 2 last week. Last week, we do have PPE also at net book value 98,102. 98,102, note 5. 98,102, they give us cost, they give us accumulated. So we can open T account for cost and accumulated for question 2 last week. However, for question 3 this week, we still got PPE net book value. Do we have a note on cost and accumulated? No. So how? Question 2 last week, we got a net book value with a note 5, telling us what is cost, what is accumulated. However, question 3, we still have net book value, but there's no note telling us what is actually the cost, what is actually the accumulated. In other words, we have to combine and do together. Okay, combine and do together. Let's give you some example. Okay. If the question gives us the cost of the asset as well as the accumulated, do we know the net book value? 80. Show separately. During the year, there is a disposal of an asset cost 30. If disposal, what do we do? Cost 30. The accumulated, assuming is 12. 20 lah. No, cannot. 10 lah, 10. Do we do this? Step 1 and step 2. Are we transferring net book value 20 over? Yes. Next question. What if during the year there's a depreciation? Where should I put the depreciation? here 15. During the year, I did buy some more asset here, correct? What do I do with this? If I sell it for 22, I make a gain of 2. And I continue to depreciate, close my accounts, that's it. This one, if I got 2 separate accounts. This one learned already, last two session and last week. Question now, can I combine these two together, cost and accumulated? Yes. So question 3, we have to combine. So how much is my PPE when I combine? We combine means we must show the net book value. What is my net book value at the beginning? I start with 100, start with 20, accumulated, is it 80? Yes. During the year, I dispose of cost and accumulated. So what must I do with my disposal? I must credit, correct? Should I credit 30 or should I credit 10 or should I credit 20 net book value? This is my net book value 80. When I sell off an asset with a net book value of 20, so I must credit out 20. Transfer to here 20. Understand? I sell it for how much? I sell it for 22. So I make a gain of 2. Did I depreciate during the year? 15. So where should I put the 15? Combine together, we put it here. This is my net book value. If I depreciate, the net book value will reduce. Therefore, I credit. When I dispose of an asset, I will credit to reduce the net book value. Did I buy any asset? Yes. Bank 300. What is my closing balance? 380 minus 35. I have 345. Is it 345? 355. So this 355 is my cost or is it my net book value? Net book value. We already combined together. Understand? Three, four, five. Okay. Let's try one more time here. I have net book value opening, no cost, no accumulated. I have closing net book value. During the year, I dispose of an asset for 80. The asset being disposed of has got a cost of 200. The asset disposed of has got an accumulated of 130. After which, I will depreciate on the remaining asset 60. Let's combine together. I start with opening, start off with closing. Opening, closing. Done. What do I do with this? I dispose of an asset for 80, money. Put it in PP or disposal. I dispose of an asset for 80. I sell it for 80, money. Put it in disposal, debit or credit. I receive money, debit bank, credit disposal. This one done. The disposal, I dispose of an asset with a cost of 200, accumulated of 130. I already combined together. Disposal, how much? Must be net book value. Credit and debit here. What can I find? Net book value 70, I sell for 80. I make a gain of 10. So this one done. Depreciation during the year, another 60. So what do I do? Depreciation, put it under PPE, 60. So what can I find missing figure? 1030. 500 will be 530. Bank. During the year, I buy 530 assets. Understand? So which one will appear in my statement of cash flow? 530 is an outflow because I buy, and 80 is an inflow because I sell. Can combine together. So let's try this question. I got a net book value of 800, 1030, opening, closing. Note 1, Greenland purchase PPE 550. Let's open T account. I started off with 800, net book value, closing 1030, closing bring up. Okay, let's look at the question. What other information is provided? We do purchase 550, put it in, purchase, bank, add to your PPE, 550. Any more? Any more? Sorry? Loss on disposal of your asset, 5. Who went? Loss. Here, right? 5. What else? Depreciation, 250. Who went? Is it here? Depreciation charge during the year, 250. And no more. So we have to find the missing figure. So you check here, PPE, 1350. And over here is 1280. The missing figure is here. How much? Credit 70. Why do I credit 70? Because of disposal. Okay, missing figure is 70, disposal. Okay, and I make a loss of 5. What does this mean? Balancing figure is 65. Why? Because I received 65. Bank. Okay, which one will appear in my statement of cash flow? Loss we have already adjusted. Depreciation already adjusted. So now we left with this one, bank and bank. One is payment to buy. One is collection when I sell. Let's transfer. I sell 65. Purchase of PPE, I buy 550. Remember bracket. I sell 65. It's an inflow, so no need bracket. So 20, 550, 65. I got a net cash flow from investing activity. Follow the heading, put a net. Done. Is it okay? What is after I? We have O, we have I, finally we have the F. Financing activity, where do we source the finance? Financing, we need money, we can get it from the equity, we can get it from the debt. Shareholder loan. Okay, so we start with shareholder first. So if I start with shareholder, we look at the equity part here. Share capital, share premium, tick, tick. We do together. Share capital, share premium. Share capital, share premium. Last year 600, this year 750. Increase. In or outflow? Because I sell more share, I get more money, 150. We do together. Issue of share, capital increase, share premium increase by 150. Inflow. Show the working. Capital plus premium. So this is for equity. Not only that, when we have issue share, must we also calculate for dividend? Dividend paid. Dividend paid, we use which figure? Dividend paid, we use retained earning. Can I? Now, what is the difference between this retained earning to calculate the dividend paid compared to last week's question 2? Let's check question 2 last week. Retained earning, we is used to calculate dividend paid. We have opening, we have closing. You see the working for last week. We have opening, we have closing retained earning, and we put in profit for the year. What we find is find dividend. Correct? This week a bit different. Here. We use retained earning, same, opening and closing. However, this week we got one more called dividend payable, meaning we do these two together. Last week, no dividend payable. This week, we do have dividend payable, so retained earning with dividend payable together. Let's try now. Start with retained earning. Opening 40, closing 85. And the profit for the year is 115. Opening 40, closing 85, profit for the year. Who went? Yeah, profit for the year is 115. I started with 40. I make another 115. I should have 155 as retained. Why I left with only 85? Because of dividend of 70. Correct? So last week we stopped here, we paid 70. However, this week we got a dividend payable. So we have to open a dividend payable and start with opening and closing dividend payable. And this dividend here is dividend declared, not dividend paid. We learned before dividend can be paid, can be declared and paid. So this one is declared 70. So transfer this 70 because during the year I declare 70. I owe shareholder 60. I declare another 70, so I owe shareholder 130. But why at the end I owe only 65? Because of dividend paid 65. I declare 70, but I pay only 65. Means I owe additional 5. Can you see from 60 now becomes 65? So question 2, no dividend payable, we straight away take 70. But because question 3 we got dividend payable, you have to transfer to here first, then only find the dividend paid. Okay? Who we pay to? We pay to our shareholder. Shareholder is our financier. So we put it under financing activity 65. Dividend paid 65 bracket. Financing from equity done. We can also look at financing. Do we have a debt financing? Yes, we have a debt loan. Last year 25, this year 30. Loan has increased. In or outflow? I take more loan, means inflow. So inflow how much? 50. Put it under financing. Show working 35 minus 25. Increase is an inflow 50. Done. Okay. So let's see which one we haven't ticked. Which one haven't ticked? Fixed deposit haven't ticked because we know fixed deposit is a cash equivalent, similar to cash. Cash in hand and bank also haven't ticked, is a cash. And which one haven't ticked? Bank overdraft also haven't ticked, is actually a cash. So we got two cash, one cash equivalent. So what do you do with all these three? We prepare a note, cash and cash equivalent note for all these three. Here. So these three we will tick, 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 and show it here as a note. Here. How much is my FD? Last year? 35. This year? This year 30. Cash at bank last year 30, this year 20. Bank overdraft last year 0, this year 10. So you add up last year's cash and cash equivalent. This is a note on cash and cash equivalent. Last year 65, this year 40. There's a drop by 25. Okay, now let's close all the cash flow. You take 305, 465, and 135. 305 minus and plus. Do you have increase or decrease? Up or down? Check how much? 305 in, 465 out, 135 in. Net up or down? Net decrease by 25. Cash and cash equivalent opening and cash and cash equivalent closing, you get it from here. My note on cash and cash equivalent opening is 65, closing 40. Get it from your note and put it here. 65 opening, closing is 40. All balance in my SFP has been taken up, and is it balanced? Yes. 25 negative outflow from a 65 original. So out 25, I left with 40. Balance. Clear? Go back, remember, must practice. My question now, what happens if you make a mistake here? Wait. What happens you calculate wrongly, you forgot to bracket here. You forgot to add 20 here. And the 65 again you calculate wrongly. You got 3 errors here. Will your this one agree? Net increase or decrease 25? You will not get negative 25, correct? Assuming you get negative 5. Will it balance? Balance as in 65 minus 5 should get 60, but I got 40 here. Doesn't balance. How? In your exam? What happened in your exam? So you will lose mark on which part? There. You will lose mark on this, and on this. You lose 3 marks. Okay. So it doesn't balance. Now, question. Do you go and find your error because it doesn't balance? 5. It should be 25. Do you go and spend your time and find the error? If you really spend your time to find your error, you spend 5 minutes, you check and check, the error is here. 5 minutes, then you got this correct, you get 1 mark. Will your cash flow still balance? No, because you got 2 more errors. Would you still want to spend another 5-6 minutes because now lesser error, difficult more to locate? Will you still want to find the error? If you are stubborn, you will spend another 7 minutes, maybe cannot find the error. Meaning you have already spent about 10 minutes just to correct 1 mark error. Don't waste your time there. If cannot balance, leave it. Don't be stubborn. When I mark the script, 70% won't balance. So it doesn't matter. Higher level, like we did ACCA, cash flow, we don't bother to balance. We know we go in, can never balance. So our concern here is not to balance, it's to grab all the marks. Clear? Clear. Now, earlier group, they say, what happens if they don't agree? I got 5 negative. Can I purposely and put it here as 25 to make it looks good? You can always do that. Understand? But now what happens if it's 5, negative 5, and 65, by right here should be 60, correct or not? Do you adjust this or do you adjust this? These two you don't touch. Why? Because you get it from your note. Marks is already given for this, this, and this. 65, 40 is already correct. So you do not touch this 40 and 65. You want to touch, you want to change, you change this. Anyway, that one no marks one normally. You want to put 0, whatever, up to you. Okay? Can I? So this is for indirect method. Done. Now, direct method. Okay. This question actually they ask us to prepare using direct method. What is the difference between direct and indirect? OIF is for indirect, correct? Direct method also OINF, operating, investing, financing with all the cash and cash equivalent. Financing activity same. Operate and investing activity same. Operating activity will be different, but both will give the same answer. Understand? Different method to get the correct answer. Not only that, you are asked to prepare also, you are required to prepare a reconciliation. The standard says, if you want to prepare direct method, you must prepare one more reconciliation. What is this reconciliation? It is exactly the same as operating activity in indirect method. Repeat. If you are preparing direct method, operating activity will be slightly different. Not only slightly different, you must prepare one more reconciliation. What is this reconciliation? It's exactly the same as operating activity in indirect method. So now, if you are the company, do you want to prepare using indirect or direct method? We will prepare using indirect method because we only do it one time. And I can tell you 99.9% of the company in the fund, when they prepare financial statement, all use indirect method. Okay? In higher level, ACCA, all these people, all the higher people, for cash flow, we will also be tested on indirect method. So what can you conclude from here? In your exam, if you look at past year question, is it all direct or all indirect? All indirect. You know how to make your conclusion? I'm not saying anything, I'm recording. Okay? Spend more time in indirect method. Okay. Now, why we call it indirect method? Here. Why indirect method? Why we call it direct method? The format. If you look at the format for direct method, operating activities, cash flow from customer, cash paid to supplier, cash paid to employee, cash paid for expenses. These two are expenses. Cash paid to employee is staff wages, correct? Cash paid for other expenses. So these two are expenses. Tax paid, finance cost paid is the same as that indirect method. In other words, I tell you what, here, for direct method, the only difference is only here. The only difference is only from here all the way to here. Section 1 and Section 2. When it comes to Section 3, for direct method, it will still be the same, 342 minus 20 minus 17. You come back to the same answer. It's different approach, different method, same answer. Clear? So for direct method, we start with what? There. Received from customer, paid to supplier, and paid for both the expenses. Why we call it direct method? Here. How to memorize in case it really comes up? Here. Think of SPL. Direct method, the format, you think of SPL. We know SPL, we start with sales. Cost of sales, gross profit, expenses, profit. So direct method means directly from your sales to here, we start with cash received from customer. We sell to our customer, from customer. What is next? SPL will be cost means purchase, cash paid to supplier. Expenses, the standard say must split into employee and others. So we split both expenses. Got it? So to find cash received from customer, we open trade receivable account. To find cash paid to supplier, we open trade payable account. Let's try now. For question 3. We are asked to prepare using direct method. Starts with what? Cash received from customer. Open what account? Trade receivable. So do I have a trade receivables here? Yes, I do have a trade receivable 197150, opening 19, closing 15. Here. Opening 19, closing 15, open trade receivables, and put in your sales account, sales balance. How much is my sales during the year? My sales during the year is 1702. Sales during the year 1702. Question. My sales is 1702. Does it mean I receive also 1702? No. So how much I actually received? Check. 1899 minus this 1749 balancing is the amount I received from my customer. Okay. So to calculate amount customer received from customer, open trade receivables, plug in the sales. Done. Answer 1749. Show working whatever I want. Number 2, to find cash paid to supplier, open trade payable. How much is my payable? Opening 18, closing 90. Opening 18, closing 90. What must I find? Here I find put in the sales. Here, purchase. trade payable because of purchase. You check to your SPL. Do we have purchase? Do we have purchase? No, we have cost of sales. Cost of sales and purchase is different. So can we find purchase from here? Yes, if we use opening closing inventory. Here, in order to find purchase, we have to use this way. We know opening plus purchase less closing is cost of sales. We have opening, we have closing inventory, we have cost of sales, 870. Can we now find purchase? So use this method to find purchase. So my purchase is 875. So once I got my purchase, put it here, 875. Okay. Can I know how much I pay to my supplier? Paid to supplier is 965. Is it okay? So first one, to find cash received from customer, open receivable. Payable, open payable. However, to find purchase, we need to open this one. Clear? So 965 is amount paid to supplier. $965, put a bracket, done. So customer, supplier, and the next thing is show amount paid to employee. Question. You notice just now, we didn't bother to look at note 2 because it's related to salary, employee, only relevant for direct method. If you look at question 2, last week's question, note 6, staff cost related expenses also related to staff. This note is for direct method. Okay. So note 1, note 2, included in the operating expenses, this one, included in here, 435, is an expenses incurred for salary. Salary expense doesn't mean salary paid. Salary expense is 200, but we may pay more, we may pay less. How to know? Here, we have a prepaid salary opening 18, closing 25. Prepayment is an asset. Opening 18, closing 25. Here, prepayment is an asset. Opening 18, closing 25. Put it here. Salary, note 2 say salary expense is 200. Put it here. So we find the balancing figure. We actually paid salary 207. Salary expense is 200, but I pay more, 207. So my prepayment increased by additional 7. You check 18 now become 25. Prepayment has increased by 7 because I pay more. So 207, you put it in your cash flow. Here. Okay. And next one, 435 include salary expense 200, in which we have already taken out. So how much is the balance paid? 435 minus 200. Take out the salary. In other words, these are cash paid for other expenses. Is it okay? Can I? Now, question. What if I tell you here, the 435 include salary, we take it out. This 435 include also 35 depreciation. Do we pay for depreciation? No. So expenses include depreciation for 35. So how much I actually paid? Okay, ignore the 200 lah. Let's say 435 is my expenses here. Include $35 depreciation. How much I actually paid for the expenses? 435 is expenses, include 35 depreciation. How much I actually paid for expenses? You must take out the depreciation. I actually paid only 400. Clear? So your cash flow, you must show only 400. Take out depreciation. Take out loss on disposal. All these do not involve cash flow. All right? Up till here, the rest all will be same. Any question? Repeat one more time here. How important is direct method? I do not know. But if you look at past year, have you all looked at the past year? Have you seen before direct method? Never. Okay, no? Never see before. Even when we work, never see before. Other costs, accounting courses, we don't really ask direct. We never ask direct method. The external examiner never ask direct method. Okay, right? But I did not say it's not coming out. Recording. So you know how much time to spend on direct method? If you ask me, spend 2%. 98% of the time, please spend to practice on indirect method. Is it okay? And that's how we make our judgment. But if it come up, don't blame me. I say 2% coming out. Okay? Spend more time on indirect. Okay. Now, let's try to understand one more here for understanding purpose only. Here. Trade receivable. If my opening balance is 0, closing receivable is 0. Carry down, brought down, 0, correct? During the year, my sales is 1,000. No opening, no closing. How much is the amount I receive? Exactly same. No opening, no closing. I sell 1,000, I collect 1,000. No issue. But what if I sell I have an opening of 20, I have a closing of 30. Bring up 30. How much is my bank balance? 1020 minus 30, 990. I sell 1,000, but I collected this year only 99. Why is there a difference of 10? Just now is 1,000, 1,000. Now 1,000 and 990. Why is there a difference of 10? Because we have opening and closing. Just now, if my opening is 20, closing is 30, receivable increase by how much? 10. When receivable increase by 10, cash flow in or out? Out by 10, correct? Receivable up, cash flow out. My sales is 1,000. Because of opening and closing, increase, I minus 10, the amount I collected is 990 there. So when I sell this much, it doesn't mean I collect the same amount because of opening and closing. Okay, now, so when you look at this one, I sell 1702, but why I collect 1749? Let's check 1915, down. So cash flow up by 47. I sell 1702, but because of opening and closing, I have to add 47 so that the cash received is actually 1749. Clear? So we adjust for the opening closing. Now we try to relate to indirect method. I started off with profit before tax 147. Started with profit before tax 147. Is this 147 including the inclusive of this 1702 sales? Have I already included the income of 1702? 1702 is already included in this profit here. But did I actually receive 1702? No, because I got opening and closing receivable, correct? So is there an increase or decrease? There is a decrease, so I add 47. So the actual amount I receive is 1749. That is why when we calculate, we start with profit before tax, 147. We adjust for the 47 here. Add 47. Not only that, can you see this one? We adjust for opening receivable, closing receivable here. When we prepare trade payable, we also adjust for the movement in payable. We also adjust the movement in your inventory. So all three opening, closing, we already record them in this working. In which indirect method, we put it in movement. Is it okay? So that's why we come back to the same answer. So if you are confused, then forget it. Okay, now? Otherwise, it will help you to understand further why we have this method here. Clear? So take down the answer. Question 3. Continue. Continue. Tutorial 12 and 13. Who is not coming next week? Next week will be our final week because the following week is on Friday, which is Merdeka. Yeah. Yeah. Replacement? Replacement? Replacement, no one will turn up, so no point replace. So next week will be our final week. So it means I'm going to cram tutorial 12 and 13 together. That's why I give you the answer now. You go back and try first. And how important is ratio? Exam, of course, yes. Even when next time you work, DBF, BFI, accounting, all are very, very important when it comes to interpretation. Calculation, formula, you can use the computer to calculate. Anybody can calculate. Interpretation, not everyone can explain. Okay? So next week, I will try to highlight common mistakes made by you. Okay? Answer. Continue. Continue. And last one. Done.